Hey everybody, hey traders, happy Monday. Welcome to the Weekly Outlook. This is Chris Pulver here. Let's talk about all things stocks, forex, cryptos with the final trading week of 2020. This is a Weekly Outlook for December 28th through January 1st. So we will have a holiday shortened trading week with New Year's Day on Friday. Markets are closed. Just like last week, we had markets closed for Christmas Day. Hope all of you had a fantastic holiday and are enjoying the time off. If you have time off. I am looking at kind of the movers and shakers for this year, where the indices are finishing up year to date, and looking ahead to 2021 as always. So hopefully everyone had a fantastic year of trading. Most traders and investors I talked to for 2020 absolutely crushed it in stocks. Anyone holding cryptocurrencies had a great year as well, despite the big setback from Ripple. We had Ripple all the way up towards 90 cents, is completely reset back towards like 30 cents or 25 cents. That was a big kind of letdown, considering the trajectory that Bitcoin was on and everything was gaining traction. And we had a big break above 30 cents on Ripple up towards 80, 90 cents, but it's been reset with some probing by the SEC. So we'll see where Ripple goes, but other cryptocurrencies are still doing very, very well. Forex, nice and steady. For me personally, I kept pace with the S&P this year and beat the Dow Jones. I beat the Barclay Hedge Fund Index. I beat the Nikkei 225. Some of the major benchmarks that I compare myself to every year, I did that with some of my larger accounts. So I'm really, really happy with that. And I also did that with a fraction of the volatility and drawdowns that stocks really saw this year. I mean, we had on the major indices a 30 to 40% sell-off. Just imagine your overall portfolio value going down by 30 to 40%. Of course, recovering in pretty much in full, and then making new highs as we're sitting at new historical highs with an 11-plus year bull run, the longest in history. And that's where I want to talk about kind of the important things this week. So first, after a little bit of hesitation and a bit of a scare, the U.S. officially has a $900 billion stimulus package put into plan, into law. Tens of billions of dollars going towards airline industries, direct payments towards U.S. citizens, those who qualify, unemployment benefits, eviction moratoriums, all sorts of stuff that are piled into a $2.3 trillion overall bill, 1.4 billion or trillion to fund the government and provide foreign aid and tons of military projects, and then 900 billion for everything else. Movers and shakers in 2020, here's how the conversation goes. Did you buy anything in 2020? You probably made money, right? If you had the courage and the cash to buy and invest in 2020, you probably had a great year. I mean, there were more 50% positions, 100% positions and again, it's from the bottom. I mean, essentially, if you had the courage to buy anything from March onward, the returns were incredible. Now, marginally speaking, I mean, look at the index year to date. Year to date, the Dow Jones from 2019 to 2020 is up 6.64%, but it had a 30+% drop and then a 40+% rally to get to a net year to date 6.64%. S&P 500, 30+% drop, rallied up 40+%, 15.89 on the year. NASDAQ, 40+% to the downside, 60+% to the upside to finish with a 44% gain on the year. So it was a crazy and turbulent time. Timing was a big factor for, the best opportunity. If you had, like I said, the cash, the courage to buy from March onwards, it was a really amazing year. Now, do I think that's going to continue into 2021? Probably not. I think there's going to be, I talked about this last week in the video, a K-shaped recovery. My focus for 2021 is buying great companies that are strong, have a competitive advantage. They have a lot of cash. They are flexible and maneuverable, and they have a strong and stable e-commerce presence. That's a big one. So I think that, I want to buy great companies at bargain prices. I want to buy great companies in poor market cycles. So if we have, some good technical structure, which I think from September's levels, I'll get to the charts here in a moment, September's high to low levels that we saw were some pretty big swings, and we just barely poked above those highs to end the year. Now, we have a pretty amazing landscape that has financially engineered these new highs, I think. We have no interest rate yield. We have no carry around the globe. So, I mean, it's forcing money to go into riskier assets like equities in the stock market. Treasuries is downtrodden. Gold and silver had some great years. Copper's up like crazy. Cryptocurrencies are starting to see more and more legitimacy. And is it a hedge? Is it another way to diversify? Sure. And in the Forex market, it was probably one of the clearest years to see a risk on versus risk off trading cycle. So basically your, riskier assets like your Aussie, New Zealand, your CAD, your pound, when it's risk appetite, which it was throughout the year, those were the stronger currency pairs. Once we had bottoms in March in the stock market, the Aussie has not looked back. It's been strong ever since. The New Zealand's done very well. The pound has recovered reasonably well. The dollar's been hit really hard. The euro's been hit pretty hard, and the yen has been hit pretty hard. So your safe haven currency pairs are the weakest, and your riskier currency pairs, or considered risk asset currency pairs, are the strongest. So overall, there's been some really interesting plays in a variety of markets, in stocks, in Forex, in cryptos. Looking ahead to 2021, I'm going to continue to increase my holdings in companies that I want to have big positions in. I'm a big fan of holding, Amazon and Apple and Microsoft. I really didn't jump in all the noise with Tesla this year. It's amazing to see what Tesla has done. It's amazing to see. I was looking at the top performers, the best and worst performers of the last 11 years for this bull market cycle. I mean, Domino's, Pizza, 5,770% for the last 11 years. Netflix, over 6,600%. It's like Netflix I was in, Domino's I was in a little bit of that, not all of it. Chipotle I was in a little bit of that. Lululemon, 9,600% in the last 11 years. Some of the numbers are staggering, but at the same time, you look at the last 11 years and see who didn't perform well. And most of the worst performing stocks and companies were in exploration, energy. I'll just name a couple here: Pacific Electric and Gas, First Solar, Murphy Oil, Marathon Oil, Range Resources, EQT Corp, Transocean, Chesapeake Energy, which to me, it's a funny story about Chesapeake Energy. My Robinhood account that I established 5 or 6 years ago, that was my first free stock, was Chesapeake Energy. I was like, oh, that's cool. It's really cheap. So let's see what it does. It's pretty much worthless. Now, at the same time, maybe it's like a little, winning lottery ticket, where if Chesapeake Energy goes from $1.90, which I think it's trading at right now, to $5, wow, that's a huge return for me. So I don't know. It's just going to be interesting to see how it plays out. But for the most part, the last decade plus, very ruthless on the energy sector and very fortuitous in the tech sector and a lot of other things. So I think that's a good time to transition into the chart, show that structure from September, talk about moving ahead into 2021. And again, this is the final weekly outlook of 2020, and I hope all of you had a fantastic year. I'm going to get into the charts here in just a moment, so understand there's risk in trading. Please and always use trade capital only. Benji's got to get down for a second. And don't trade with money you cannot afford to lose. You know the deal, right? If you're following me out there on social media, and I would appreciate a nice thumbs up for the video, and make sure you subscribe to the channel, click the notification bell. All the views, all the thumbs up, all the comments really help. My YouTube channel, just type in my name, Chris Pulver. Facebook, Twitter, and Instagram, those are the handles right there. My Keep It Seriously Simple video series, this is what the thumbnail looks like. You can find that series on my YouTube channel. Let's get into the chart, shall we? So let's talk about, I was actually looking at Peloton, seeing that it's filling that gap to the downside. I'm really just kind of coasting for the rest of the year, booking some profits, using trailing stop losses on a lot of my stocks. And like I said, companies that I put some money into, these are my big ones here: Apple, Microsoft, and Amazon. I also will continue to increase my holdings in Costco. I'd like to see some dips on Target if possible, but those are really, kind of my bigger positions out there. I think that Apple's going to have a great couple of years lined up. They have made some headway on talking about getting into the electric vehicle game, which could, maybe be a competitor for Tesla. I know that NIO is kind of the China version of Tesla, and that did not do so hot. Microsoft has solid dividends, big tech company. Again, look, maybe it's too easy to say like I'm going after the big market caps, but I don't think it's a terrible idea to have holdings in these companies. I buy stuff on Amazon all the time. Within 1 to 2 days, it's at my front door. We go to Costco once a week. Microsoft, every PC, and I've never had a Mac computer, even though I love Apple. I have their phones. I have a watch. Anyway, I don't think it's a bad idea. Would I like to diversify? I mean, will the growth in these overall be amazing? Not necessarily, but I'm also kind of bracing for, if we have a major correction, if we see, another kind of bearish market cycle coming, or what I would like to say is reality, then maybe those companies still do pretty well. Let's talk about reality for a second. This is the September structure that I have been seeing. And, I thought that post-election, the market made a nice little run up to new highs. Do I think this is sustainable to just keep doing this? If we do, then this stretch any higher is what I'm calling euphoria. I think that this is the irrational stretch. I think this is where it's just going to go. take as much profit out of this run as you possibly can, but be prepared for something like this. I think it may be hard over the coming 6 to 12 months to really justify sustaining this trajectory. After this bottom this year and this type of run, more than likely we will see something that is a little bit more sideways. So you can see this on a weekly chart. And let me actually delete some of these. So something like this. This is a good period back here. If we go into this time, from about 2015 to 2017, we had a 2-year sideways cycle. We obviously broke that cycle. It's interesting that you see that this level back here was revisited by resistance becoming support. Also, you have this broadening formation. So there was some really good technical structure that gave some signs of the bottom. We scored a point for the bears. We stretched out to the bottom of this broadening formation. We used 2015 to 17's range resistance to become the bottom, right? So I could see something like this playing out once again. Perhaps we see another range, and maybe it's this area. Maybe it's right here. Maybe you just take a new box and we start to go into something like this. We start to go sideways and we establish another, maybe 12 to 24 months, just like we had back here, where the market can't really break new highs, but it's, sustainably supporting these lows. And that's why I think that September structure from this year is going to be really important. If these levels break down, then we may see some scary times ahead. But I think that we will see most likely some sideways range bound trading. And I will look at buying support, and this is going to be how I time the cycles, maybe add to some of my positions, maybe even add to the SPY and trade the ETF. So overall, nothing incredibly complicated, but this is the SPY, this is the structure that I see. This is the DIA that follows the Dow Jones, very similar. You can go back on the weekly chart and see that same type of structure. Previous resistance back here in 2015 to 2017, the same level. Look at the breakouts. So we had resistance here, became the floor, became, past resistance became future support. You had the base of a broadening formation. This was support, support, support. Connect the dots. Nice previous resistance becoming future support. The NASDAQ, same thing. The NASDAQ, after a 40+% decline and a 60+% rally, year-to-date performance, 44%. I'm going to go ahead and just take a line here, take a horizontal line and put it right there, because I think that we have some structure within the September swing. So this high to low in September, we just eked out some fresh highs, but we could use this structure right here for some sideways movement on the NASDAQ. Perhaps this high from January, February 2020, before we had our COVID decline, that high right there could also offer some decent support. So I'm looking to buy, the ETFs. I'd like to buy the QQQ, right? I'd like to buy the DIA and the SPY. So you can see this on the QQQ following the NASDAQ. Use this January, February high, mark that right in there. So do we start to get some corrections? Yeah, maybe. Maybe it's sideways. We come sideways here. Maybe we pull back into this previous resistance becoming future support. And, it's been an amazing run. We come back and balance a little bit. I'm looking to time some of these bottoms. And maybe it's one bottom. Maybe it's right here. This resistance becomes support. I time it, and the next move, maybe it's here. We pull back, we go to new highs, and that's a great way to buy the dip. But I don't think it's just going to be one dip. I think we're going to have some times where it's going to range ahead. So that's what I'm expecting to see in 2021. How I'm going to trade that is I will try to time some of these support levels. I will start looking at building positions on some of my great stocks that are playing out, that I want to hold, that, again, e-commerce presence, lots of cash, and a competitive advantage in their respective industry. As far as Forex goes, I'm going to take a look here at the currency strength chart. This is a tool that I watch every single day for some intraday price action. Like I said, this year, and I'm wondering if this is going to carry over into 2021, the risk on versus risk off currencies. I just found it really interesting that there were so many examples of you can just clearly see what is a risk on currency pair versus a risk off currency pair and how that relates to trading. Early in the year with February and March's swift decline in the stock markets when everything was tanking, we saw a very strong dollar, we saw a stronger yen, and a very strong Swiss franc. And while those safe havens are stronger, you see a weaker Australian dollar, a weaker New Zealand dollar, a weaker CAD, and a weaker pound. And then it all flipped, where we had our bottoms in the stock market, and the Aussie all of a sudden went from the 2-year downtrend worst performing currency pair to like one of the strongest currency pairs for the entire year. and that trend really has not stopped. So it was just a poster child of like risk on versus risk off trading, what currency pairs are attached to those themes, and that's pretty much how it played out. We had some interesting volatility pockets this year, meaning we had some windows where it was very high volatility for some intraday trading. Probably, and I'm not joking, like there were probably about 4 weeks of my entire year that I was a scalper and day trader. And it was very deliberate. It was intentional. We saw that volatility was extremely high during that time in March, and we had a solid couple weeks where, myself and my trading room, we switched the times. We're trading London sessions, we're trading active zones, and we were scalping. And then once we had some Brexit drama coming up this last month or so, same thing. The pound pairs are moving every single day, and it was just a really, really nice way to trade it. But the rest of the time, we have obviously some big cycles and trends, but those were few and far between. For the most part, volatility was not high this year. It was pretty mediocre. And I had a lot of solid, like good pattern trades, good pocket trades, really nice range bound strategies at work. So I just kind of let my robots help take the trades when I need to. And my year in Forex was, as consistent as could be, other than just kind of seeing some surprises in March when everything went haywire there for a couple weeks. But I managed to keep my drawdowns relatively tight considering my returns. Overall, pretty happy with the ratios in that front. So yeah, Forex is good. Cryptocurrencies, this is why I play the game. Bitcoin currently trading at 27,000. I didn't even buy Bitcoin. Even with the euphoria back in 2017, I was like, you know what? It's to me, I didn't know who to start with. Like, what's my broker? It all seems kind of shady. So I stayed out of it. CME created a futures market in 2018. So to me, that indicated that a bubble is going to burst. We're looking at a ton of arbitrage and looking to sell. So I waited and I saw some nice, technical levels back around $4,000 to $5,000. And essentially, that's when I started to participate. So holding, basically it's always been to me a mindset of I'm going to buy and hold cryptocurrencies and see what a finite amount can do. My finite amount in Bitcoin is up around 600%. My finite amount in Ethereum is up around 300%. My finite amount in Ripple was at one point up around 400%, but that has been reset with the recent SEC probe. So XRP USD. Ripple's trading at 28 cents. I didn't even start buying Ripple until 20 cents. So I'm still fractionally positive, but a big disappointment considering we were up towards 80 cents on Ripple. We'll see what happens. Hopefully this was kind of an overreaction and Ripple gains some stability and Bitcoin leads the way and maybe Ripple gets its groove back a little bit. But Ethereum making new highs. We're at 745. I believe my Ethereum levels are down here between like $250 and $300. So that's up a few %. Not complaining. Litecoin also seeing some trajectory to the upside. Bought some equal lows around $40, and here we are at 132. So up around 300% and then some. So all good. So really, I mean, look, there's a lot of stuff as far as being a trader investor. There's a lot of things to be thankful for in 2020. I certainly left money on the table. I'm sure everyone else did. I'm sure there's some FOMO traders out there that it's like, oh, if I would have done this, or if, of course, you always look back and think, what could you have done differently? But the reality is, there should have been some good opportunities for everybody. I hope everyone had a great year. And this is a really important time to learn how to be a trader. If you had a great year and it was lucky, if you had a great year and you have no idea what you're doing, get some education. Join a trading room, get a community where we do this every single day. We're not profitable by accident. If you're doing this, year over year, month over month, it's not by accident. So I think that don't go into the next 12 to 24 months thinking like 2020 is going to happen all over again and keep happening. To me, that was an outlier type year, but it was fun, and I'm happy. Like I said, I'm very fortunate to be on the correct side of things and make some good profits. And I hope everyone else did the same thing. But moving forward, I've said this for the last year now that I'm basically trading with one eye open. Like, I don't trust what the markets have been creating. I think we've created this unsustainable, financially engineered bubble. I'm not fighting it. I'm not calling the top. I'm not super bearish. But at the same time, it's like, I don't know how this continues, and I don't know how this doesn't end badly. So I'm really cautious moving forward, which is why I'm focused on good companies that I want to buy and hold. I'm focused the way that I trade Forex. I've traded Forex pretty steadily for the last, I've been trading Forex for over 10 years, but really steadily my strategies the last 5 or 6 years that have been really solid on the drawdowns, decent returns, beating my benchmarks, and that's my job. So I don't think Forex is something I get overly excited about. It's just that's my grind. Um, and then cryptos is kind of exciting. Let's see where that goes. Stocks, I'm looking to just kind of make it easy on myself and try to time a little bit better and see if I can find some great levels to buy and hold at with some great companies. But Forex is really where I do most of my work. And looking ahead in 2021, it's going to be interesting to see what plays out. Do we start to see, an improvement on the economies? Do we start to see jobs coming back? Do we start to see unemployment numbers going down? Do we start to see GDP numbers boosting, CPI numbers boosting? Are we going to see banks start to consider raising interest rates? Is that narrative going to start again like we had back in 2018? I don't know. So all these things will be discussed in 2021. This is why I run my Flex trading room. This is why we have 1,000+ traders that are in it, and for the most part, traders did well. And if it wasn't in Forex, if you're learning Forex, if you're learning cryptocurrencies, if you're learning stocks, whatever it is, let's find a way to be profitable, right? So I think I can kind of wrap it up there. I just want to use this weekly outlook as kind of an overall summary. Surprisingly, the markets turned a profit this year. We had some great stories in stocks. We had some consistency in the Forex market. But honestly, I think the Forex market was much more boring this year, outside of its window in March where it was really exciting, everything was haywire. But Forex, for the most part, this is why I love the market. I actually love Forex because it's so boring. Because even with all the insanity going on, Forex is still the most technically efficient market. And to me, that is a very tradable market, and it's also the most liquid market. So I love Forex for that. And even though Forex was stable and consistent, and it's a trader's market, stocks, on the other hand, were amazing. So, maybe there's a trade-off. Maybe 2021, Forex stays stable and consistent. Maybe it gets a little bit more exciting with volatility. Cryptocurrencies were, on the insanity level. If you're tipping the scales, I'd say cryptocurrencies had an amazing year towards the insanity level. Will they sustain this euphoria? Will there be more money pumped into them? Let's find out. Stocks, maybe it's a choppy year in stocks. Maybe it's an underperforming year in stocks. Maybe the expectations are so much higher now that maybe it's better to learn how to trade options in 2021. So I'd say, if I'm gonna leave you with a message for 2020, it's look, I'm as happy as everybody else that 2020 is over, but it doesn't change anything. Like this year ending does not all of a sudden mean like it's all better. Like we're done, it's on to new things. Look, I want to be optimistic going into 2021. I'm still going to be cautious because I see that there's a lot of writing on the wall with things that could go very badly. There are rational things and irrational things that happen in the market. So we're always trading to be prepared. I always like to say, plan for the best, prepare for the worst, and, trade accordingly. But that's why it's risk capital. That's why it's sound equity management, and we make good decisions. And being profitable is not an accident. So my message is this. If you made money and profits this year by accident, you owe it to yourself to learn how to do it consistently. And if you had a decent year, a consistent year, if you've been trading, investing for a while, and it was a great year or a mediocre year, let's work on what we did. Like, what did we not do so well? Let's improve on that. Maybe it was just not taking enough risk. Maybe it wasn't putting enough cash into the markets and missing out on some of the big runs this year. Okay, fine. Well, again, I missed out on a lot of runs. I made solid profits, but I missed out on a ton. Was I buying Peloton and Zoom and Wayfair? It's like these companies that were had no business making the gains that they did. Peloton stock was up like 500%. Tesla could do no wrong. It's accepted in the S&P 500. It's the 6th largest market cap in the entire S&P 500. That's crazy. With a CEO that says the stock price is too high and hundreds of thousands of cars are getting recalled. So here's the message. Learn from your performance. If this year was a fluke, okay, well, let's figure out what we actually did. Let's kind of dissect what we did to be successful. If it was deliberate, if it was an intentional profits this year, and it was all part of your trading plan, awesome. Do more of that and proceed and plan everything. If it was not a great year or you missed out, well, that's what you can improve on. So we're always reflecting to improve our shortcomings and also enhance our strengths. And we're just striving to be better traders. So as everyone, celebrates the new year or this year ending, I'd say that's probably most importantly, celebrate this year ending, but know that it's not going to drastically change. Over the next 3 to 6 months, reality has to set in at some point. I think overall the economy as a whole for the globe is not doing so hot, but the stock market is completely disconnected from that. So we'll see how that reality sets in and how they kind of reconnect with certain correlations. But 2021 means this: we plan, we prepare, we profit. It's a process. That's it. Process equals profits. It's so true. You know, the money that we make, the profits that you're earning, it's a byproduct of good planning. It's a byproduct of a deliberate process. It's intentional. You know, doing this for a living or doing this consistently is not an accident. So again, get some education, get into a trading room, work with a like-minded trading group, and like this video. All right, look, happy Christmas, happy New Year. I will see everybody in 2021. Have a great week. I'll be watching the markets, but for the most part, just have some robots trading, protecting some profits, and I'm looking forward to being back at it next week. Clean slate 2021. Start from scratch, start from zero, and let's see how well we do. All right. Happy trading, lots of profits, everybody. Talk to you soon. Take care. Bye bye.